Hey everyone, I'm Charting Man Dan Trader, technical analyst, mentor extraordinaire. We're going to check in on the broader market today and quantum stocks, Tesla, a whole bunch of things, natural gas included, as we question whether it's time to get a little bit protective in the market, and we'll highlight the key levels to be watching. So looking at the S&P 500 futures chart here, we did not hit a new all-time high yesterday when the NASDAQ did and led the way. In this current market environment, when we're this extended, when you look at a monthly time frame going straight up the entire year, it's a gift whenever the market gives us a very clear hedging spot and a very clear invalidation point. Back here was another one, better on the NASDAQ, but you don't want to be constantly hedging and racking up losses, which is why you want to be keeping those stops nice and tight. For example, back here, we've got our high, we fail. All right, you can top fish and hedge, invalidated. There's been plenty of times where I've stopped out break even or with small losses in this market environment looking to hedge and protect, and then my long IRA continues to benefit when my shorts get stopped out and we see continuation. Just an example, the most recent one I can think of is XLF. I grabbed a hedge here where there was a very clear wall of resistance at all-time highs. We got a short-term bear break. I sell a third of my hedge. I put my stop over the high and I stop out break even, and that's a-okay. And so that is my approach to the market because, again, we know a bigger picture, in my opinion, a bigger picture market top with months of consolidation is coming sooner rather than later. And so we don't want to, open our eyes and wake up and say, oh, man, we've been pulling back for 2 months. I want to protect. No, we want to protect into strength, and that's another spot to do it on the S&P 500. So it's all about the low of Tuesday. We know if we don't break the low of Tuesday, absolutely nothing changes. Look at this previous resistance holding as support, and that's in play over the next couple of days. You can zoom in. It's pretty much a 12-hour tightening range. The bulls are hoping for a green Friday to keep this a 12-hour equilibrium. If it were to break bear, we would zoom out, and we would then look to our weekly supports, reminding ourselves that we've been in a very clear weekly uptrend. Remember this sucker punch when that then became the most important level, and then this became the most important level, and then this became the most important, and then this. You get the idea. If we don't lose the weekly higher lows, we're not going down in any meaningful way. So the most important level for me in the short term for SPY is 602, but bigger picture, as we zoom out, the most important level for me is really 567s. If we hold 567s, there's no major red flag. So, again, I don't want to sit through a 5 to 7% drawdown before I think about protection. I want to be doing that a bit more actively. NASDAQ, bull flag confirmed, no follow through, but again, no red flags. It's a daily inside bar. 4-hour EMA 12 is being tested. And so again, if we're going to see a clear shift here, it has to be a bull flag that confirms with no follow through into a break of support. So the simple statement here is bulls have nothing to worry about if 519.16 is support. What we saw the majority of November was rotation out of semiconductors and big tech into growth and IWM. Now, all December, we're seeing the opposite, where this is MAGS, which is the Magnificent 7 ETF, and it was just a sideways range while while we were rotating, while the Russell and other things were going up, and now we've got a daily 10 stair-step pattern, a higher low every single day, 10 days in a row, as we saw all-time high after all-time high. Apple, Google, Meta, everybody's hitting an all-time high. The next big question for me is when we see the Magnificent 7 consolidate on the daily, which we know is inevitable and is coming potentially right now, does XLF rotate? Because again, look at this perfect rotation. We topped out Wednesday the 27th. Mags, what were you doing Wednesday the 27th? We were right here. It's literally doing the exact opposite because of the picture perfect rotation that the market has been benefiting from the entire year. So it would stand out to me if XLF keeps dropping when the Magnificent 7 consolidates. Then I'd say, oh, wait a minute. This is a shift in the relationship that we've been seeing consistently. But that remains to be seen. I'm watching XLF. For me, the bigger picture guide on XLF is weekly EMA 12. That's been holding for 6 months. If that keeps holding, there's absolutely nothing to worry about on this chart. That's still a bit of a ways away. So again, I look at this weekly chart. Is there any red flag? Not at this point. So does that rotation keep happening? Is the big question, because when we top out in a significant manner in this market, it will be with XLF, XLV, and QQQ all dropping together. I don't see it happening any other way after very closely studying the relationship between these major sectors for the last 5+ years. SMH, watching to see if SMH tightens up on the daily. So we've got our low, high of the bounce, gave back much more than the bulls wanted, trying to set the higher low. Essentially 2 daily inside bars. If they break bull, the higher low will be set, and we'll then watch to tighten up for a good part of next week. I still have an NVDA short. I'm sure I talked about it on Monday. Monday was my last video recap here. I took a bit of profit this Tuesday, big drop day, and I am letting the position play out with a stop here. Again, this is one of my hedge protection positions. There was nothing wrong with this chart when I shorted it. I shorted it because I knew a daily lower high was the most likely scenario. Tried and failed, finally got it. But again, I can stick my stop because I took partial profit into the initial move in my favor. I can have a stop over this level and be risk-free or tiny risk. And so that's what I'm going to do. And if I stop out, that means great. NASDAQ's at all-time highs, most likely, if I stop out of that position. And if I don't, then maybe it's bigger picture consolidation. But definitely important to be watching. Do we tighten up on NVDA a bit further? Do the bears confirm the weekly downtrend? When's the last time we confirmed a weekly downtrend? It was here. So it's been 6 months, 5 months, whatever, since that's happened. So it would stand out to us if it happens again. Tesla, bull follow through. We had the 4-hour ascending triangle, break bull. I exited a third of my swing position today. Why? My target was all-time highs. We hit it. I would still let it go just in case bulls went into stupid mode like back here. But just took a third off at 421. And we'll look to add on an hourly back burner scouting a daily higher low. But my style is selling partial into strength and then walking a stop up with the rest of that position. For example, CCJ, uranium, I entered this swing position for a daily inverse head and shoulders. I entered on this big green day. I sold partial on the way up, so my break even was under 50. And then I just walked up a stop for half of my position and put it under here. And so now I've stopped out of half of my position that was remaining. And now my break even, instead of being 50, is now down at 43. Again, unless there's a major disaster gap down, I can't lose on this trade. And now I have a longer leash, smaller position, but longer leash before we get to my cost basis. And I'm keeping my stop at $50 for the second half to ensure a profitable trade no matter what. If we set a weekly high or low and keep control, I will keep some of that position. So again, it's just I've been developing my swing trade game the last few years as I've stepped back from being on the screen 24/7. And this is part of that strategy, the scaling out and then walking up the stop. Quantum. So Quantum had a great short on RGTI on the gap up. The bounce was bigger than anticipated. I was scouting the short again today for the lower high and didn't keep a runner long enough. So we're looking for daily consolidation. We're looking for hourly oversold and a daily higher low. I don't have a position right now. Day trading, it's been going very well. Swing trading it, more risk reward. But what I hope happens is we hold 4-hour support and keep tightening up a bit. I don't know if I'll get it. If we open green tomorrow, I'm looking short for the hourly lower high. I would hope to get an hourly lower high, break support into daily consolidation, and then exit my short and hourly oversold and look to flip long. Again, this chart is unsustainable, daily consolidation inevitable, and peers have already started. QBTS, daily consolidation well underway. It's scouting a higher low. And QUBT, nice equilibrium. Looking for a daily higher low compared to 515. I'm just viewing this like this if we can hold 515. So I've been loving trading RGTI the last week plus, and so going to continue sticking with it. We'll see if the ideal setup that I want comes to me. Otherwise, I'll just patiently wait for hourly oversold to look for the daily higher low. Note there are nuances. There's so many nuances with trading, as you know. It's not cut and dry textbook definition. But normally, you look at this and say, if you know about my later morning trade strategy, it's when the bulls prove themselves all morning, you scout the 15-minute high or low. And if you show me this chart and only this, and you say, is a 15-minute later morning trade on the table to scout the 15-minute high or low, I would say yes, and look for that entry around 15-minute EMA 12. And I actually made an attempt where I played 2-minute oversold, played this, sell partial, stopped out. But what's key? Context is key. Context and nuances are everything. And if you zoom out and show me, well, actually, we double topped with the high of yesterday by 7 pennies, then I would instantly say that is not the ideal scenario for a later morning trade for the 15-minute high or low. If we're in a breakout and there's no resistance and we top out because we're overextended and we look for the 15-minute high or low, absolutely. Tesla did that yesterday, I believe. Yeah, I mean, look at yesterday. Well, not a great example yesterday. It was this one. All bulls, 15-minute high or low, and some continuation. But, and RGTI did it as well that same day, if I recall correctly, because I highlighted both of them. Yeah, 15-minute high or low, continuation. But as soon as you double top and there's a resistance level and there's a reason for bears to have a little bit more confidence, it's different. Just make note of that. Same thing, Guap on Twitter, some of you know, was asking me about HITI. And he was saying, is this an hourly backburner? First hourly oversold conditions after a big daily bull move. Generally, I'd say yes. But again, daily bull flag attempt, double top, and then rolling over. If I'm looking for the ideal backburner conditions, I want a straight drop to hourly oversold, which is what I want to see happen on RGTI. I want a straight drop on the daily, hourly oversold to try for the daily high or low. HITI is getting to hourly oversold, having lost the daily uptrend. It's not the same thing. These are little nuances that shift from aggressive or conservative, ideal setup or less than ideal setup. That's a mini, I could make that a 30-minute video in itself, what I just did there. Nuance video incoming at some point. Nuance. All right. Financial sector, we already looked at it. I'm keeping an eye out. Again, we know a weekly high or low is the most likely scenario, so I zoom in and keep an eye out for a potential bullish pattern that tells me that longer term most likely scenario is potentially taking shape. So I'm watching XLF for the possibility that it's a 4-hour falling wedge to try and shape up a weekly high or low. Am I going to long this 4-hour falling wedge? I have no idea. Probably not. I've got plenty of longs, but I'm keeping an eye out for it to see if it shapes up. Because if MAG 7 starts daily consolidation, this needs to break bull to offset it and keep the S&P 500 healthy in the way that it's been rotating all year. IWM. Weekly consolidation underway. Anything above 226.40 is a high or low. You never want to break resistance straight into consolidation. That's when we scout wedges. So is there a rising wedge on IWM? Maybe. No, I don't like that. Let's try again. Different anchor point. I wish there were a better support line there, but worth keeping an eye on. But again, you look at this and is this worth paying attention to? Sure, if you like it visually, but really it's just that price level. We're not going to break this potential rising wedge bear unless we break the weekly high or low. So that's all I care about. Weekly high or low, 226.40. And again, it's just IWM can't go up in any meaningful way if XLF is going down. Here was another one. Nice, perfect back test of previous resistance zone holding as support. That's a key one to keep an eye on. Still in an A and F short. That's going well, but it is at support. I'm expecting a daily bounce here. Shorted it. The third, I believe. And the game plan is for an equilibrium bear break. Healthcare. Healthcare is backtesting a key zone here. If we bear break with no follow through, I may be interested in a long swing. but I'm looking at this previous resistance zone, trying to hold out support. I want to adjust for dividends. So look here, again, resistance, struggling a bit, support. So I'm keeping an eye out on that zone, and I'm keeping an eye out for if we break support with zero follow through, because I'm looking for a monthly bounce, and then I'm looking for a monthly potential head and shoulders. I talked about this in my longer term patterns video. I do believe that the healthcare sector is going to lose the yearly stair-step pattern that's been in place something like 13 of the last 14 years besides the CVID little wick here. I do believe yearly consolidation is coming in the healthcare sector, and bears will have to confirm a monthly downtrend for the first time in a while if it's going to get any follow through. The dollar weekly bull flag is in play. Weekly higher low is now set. And with that, gold struggling at resistance. So we have a base of support, now a wall of resistance. This is our range to be watching on gold. Silver, a weekly lower high is the most likely scenario for me. So 2 days ago, I exited a third of a swing position that I have remaining that I've been in for many, many months. I don't even remember where I bought it. But this size of a pullback was, red flag. I hope I get my bounce for a lower high for a second chance to take some more profit, which I did. Now we'll see if silver confirms a weekly downtrend. I don't love how the metals are trading. Gold's holding up better. The dollar's just too strong. Dollar's got to weaken. Still battling. You know, the dollar's not in the clear here. This is a very clear resistance zone that we are still battling. But the dollar would have to fail this weekly bull flag for the metals to get another wind, in my opinion. Natural gas, this is going well. Talked about it Monday. So again, longed. Statement was this is either the weekly high or low or I'm wrong. So stop goes under there because that invalidates my thesis if it breaks. Got to break this level. Double top resistance. If we break it, I will look to average up on my swing position on a back test. So if we break it, back test and hold, I would add to my position because at that point I'll be very comfortably profitable. I'm in UNG. UNG has a bit of a different look than natural gas itself, but we're knocking on the door of weekly resistance. When's the last time when's the last time natural gas, we had a little weekly uptrend here on UNG. Natural gas, the commodity adjusted for contract rollovers, hasn't confirmed a weekly uptrend in over a year. And it's trying to do that for the first time right here. So we'll see how it plays out. But at least comfy. All right, I put a lot in this video. This video could have been 3 different videos of their own. So I hope you kept up. Apologies if not. If you didn't keep up, stick with it. Because a couple years from now, it'll all be fluent language. Got the sauna cooking, cold plunge chilling. I'm getting in. Do good things.